Hey everyone, it's Monday morning, June 2nd, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella. Since it's Monday, that means it's time to dive into the big market movers for the week ahead. It's going to be a busy one, so let's get straight to it. Before we begin, a quick note. Today's episode is sponsored by AMF Capital Asset Management Frankfurt. For tailored investment solutions and top-quality mutual funds, visit amf-capital.de. Markets ended May on a strong note, I mean seriously strong. The S&P 500 had its best May in 35 years, rising more than 6%. The Dow added 4%, and the Nasdaq? That one flew nearly 10% higher. So yeah, clearly investors were feeling good about things, especially after President Trump started dialing back some of those tariffs. But let's be real, that feeling didn't last too long. A trade court rolled back the tariffs midweek, and then just as quickly, an appeals court said, nope, tariffs are back. So we're kind of stuck in this loop of will they won't they when it comes to trade policy. Barclays said it well. Investors were hoping for a clean summer with a shift toward pro-growth stuff like deregulation, but now? That playbook might be getting delayed. And Trump isn't exactly dialing it down. On Friday, he posted that China has totally violated its agreement, and not long after that, we heard the US might go even further with tech sanctions. So yeah, policy risk is very much back on the table. Now let's talk jobs. The May employment report drops this Friday, and economists are expecting it to show about 130,000 new jobs, with the unemployment rate sticking at 4.2%. That's a bit softer than April's 177,000 jobs, so there's definitely going to be interest in whether the labor market is starting to slow under the weight of trade uncertainty. Wells Fargo thinks hiring will soften slightly, maybe more like 125,000 new jobs, as companies get a little more cautious with their outlooks. So it's going to be a key signal for where the economy is headed. And on the corporate side, things are quieting down now that we're mostly through earnings season. But we still have some interesting names reporting. Think CrowdStrike, Broadcom, DocuSign, and Lululemon. That should round out a lighter week. Now before we wrap, let's take a moment for the Magnificent Seven. These big tech giants, Apple, Alphabet, Amazon, Microsoft, Meta, Nvidia, and Tesla, carried the earnings season once again. They delivered 27.7% earnings growth compared to just under 10% for everyone else. And not only did they beat the street by a wide margin, they've also been leading this market rebound. Citi's Drew Pettit put it simply, in an environment where macro risks are swirling and rates are elevated, investors are looking for growth, and that means tech. Until bond yields calm down, that strategy likely stays in play. Alright, that's it for today's Capital Markets Quickie. Stay sharp, stay curious, and I'll catch you tomorrow morning with a brand new episode.